Hello, class, and welcome to our 10th lecture series on financial accounting or principles of accounting. And I'm your instructor, Jamal Haider. Okay, so today we are starting chapter 5. And in chapter 5, we are going to talk about the account receivable. So let me give you the idea what we are trying to do now and in our next lectures. So here's a balance sheet here, assets, and then liabilities plus owner's equity. So the assets, first we talk about the current assets. In current assets, there are cash and cash equivalents, which we just finished in our last lectures. And then there is account receivable, and then inventory, right? And then we talk about the long-term assets, which is plant, property, machinery, building, right? So one by one, we would try to finish how these items or these accounts, how the balance sheet items are accounted for, or what are the treatments, accounting treatments of these balance sheet items. So we just completed the cash, and now today is the turn we talk about the account receivable. Okay, so let's talk about that. So give me a second. Let me just pause the video and take the screen out to use this pen. So I hope you followed the idea of what's going on. Okay, today we'll talk about the account receivable. So let's talk about this. Number first, account for and control accounts receivable. Let's talk about this. And we already know that account receivables are mostly, not mostly, account receivable are the customers, right? So the account receivable is the third most liquid asset. Okay, let me give you the idea here. We skipped the short-term investments. So short-term investments, basically we invest in other companies' shares. So if we have excess cash, we invest or we purchase from the stock market other companies' assets, and there are three uses of those assets. Number one is trading, that we use those shares for trading and purchasing and then selling those shares and then again purchasing and then selling. So we categorize those as short-term investment under trading securities. Number two is available for sale. The purpose of available for sale is that we purchase a company's shares and we keep it for some time, for a short period of time, and then we sell it after that. For example, after 1 week, 2 weeks, 3 weeks, 1 month, 2 months, 3 months, but less than 1 year. Okay, and then the last category is held to maturity. So in which we purchase securities which are mostly debt securities, bonds of the other companies, and we keep it ourselves until they mature. So there are different treatments of the security. We're just skipping that part. So after cash, short-term investment, they are the most liquid assets. So what do we mean by liquidity? Ability to convert into cash. How quickly an item can be converted into cash, we call this liquidity. So, but we are starting it with account receivable. We skip that one just for your information. I just gave you the idea here. There are different treatments for trading for securities, available for sale securities, and held to maturity securities. Okay.
What was the first one?
What?
What was the first one? Can't read that.
Trading securities. Trading. T-R-A.
Yeah. Okay.
Trading securities. Okay, so the third most liquid asset is account receivable. So it is some monetary claims against others, our monetary claim against other, that the other person or the customers need to pay us, not we have to pay others. If we have to pay others, that is called liability. So the account receivable account is set up or acquired mainly by selling goods and services on credit, not on cash, because on cash then account receivables are not created. Okay, and then lending money. If you lend money to other businesses for a shorter period of time, less than 1 year, so you say that, so you also receive interest income on that, right? So there are two motives to issue not receivable. Number one is if your friend's business needs some money and you said, okay, I'm going to give you money, but I need some, return on that. So you receive some interest as well. And then the other method that no receivables are issued is the sale of goods. For example, you sell the goods on credit and the customer said that he's going to give you money after 90 days. And you will say that, look, if I sell, for example, the goods worth were like $1 million. $1 million, yes. And you will say that, look, if I keep my $1 million with the bank, I can earn $1,000 in 90 days. So you are giving me a little bit loss. My money is stuck with you for 90 days, right? You're going to pay me. I just sold my goods to you and you will pay me in 90 days. So it's better to compensate me with this interest. So of course, the interest will be a nominal one. The customer will say that, look, this is business routine and okay, I'm going to give you, for example, $900 plus. So when he give you back the money, he will give you $1 million plus 900. So this, trading also can be done through notes receivable. And also if one business needs, or if your, sister company or your sister businesses, they want to receive they want to have some financing issues, they can also ask money from you. We call this notes receivable. Okay, so how we are going to account for and control account receivable? Number one, so whenever sale occurred, how we make the entry? If credit sales occur, how we make the entry? We make the entry as, we make the entry as account receivable to sales. So rules of debit and credit, remember that one. So a sale on credit, what is the entry? On credit, we need to open account receivable for customers. So customers are our assets, asset increase, debit. And sales belong to our retained earning increase, credit. Sale increase credit, account receivable increase credit. Entry would be debit to credit, account receivable to sale. Everyone, do I need to repeat one more time this entry? Arone, Chloe, Ajem, David, Junpyo, Minsu, Misha, Ping Ping, all clear?
Yes.
Good. So when they, okay, and the second part is issuing a note receivable. If you issue note receivable, or if you lend money to some other businesses, then lend money, it means your cash go down, right? Cash decrease, and you create note receivable, asset increase. So asset increase, debit, asset decrease, credit. Entry would be note receivable to cash. Simple. This is the treatment of account receivable in accounting. right? Simple, easy. So recall our discussion regarding journal entries. So that concept is perfectly in line here as well. So account receivables, they are amounts collectible from customers from the sale of goods and services, sometimes also called trade receivables. If you see some British books, they will call this trade receivables. And American books, they call this account receivables. But if you see these kind of stuff in questions or somewhere else, so please remember that trade receivables are account receivables. So don't worry about that. The account receivable serve as a control account. What does it mean? Right? It means it summarizes total receivables from all customers. Right? So what do you think so? A business has one customer or many? Many customer on which your business depends as a credit sales. So how you are going to account for? So you make subsidiary ledgers with a separate account for each customers. What does this mean? So it's like that. The main is account receivable, and in account receivable, there are customers Jamal who has its own T account. There is, for example, Misha. It has its own account. For example, Asian, right? And on the top of that, account receivable. So, for example, here the balance is 400, and here the balance is 400. Here the balance is 200. But account receivable serve as a control account because it adds all the customers' number here and show you here account receivable 1000. So do I need to repeat that? That the left hand side of this P account is called debit, right hand side credit. So it's obvious, okay? So don't confuse with that. So this is what we mean, what we meant here by controlling the account. So let's read it together. Here we go. Subsidiary ledgers kept with a separate account. Sorry. With separate account for each customers. And the account receivable, it serves as the total receivable for all customers. So how we are going to show it? Here we go.